Welcome back, everyone. I hope everyone is having a great end of the year. Those who have followed me on Twitter will probably know that the videos that you all saw in the past 3 weeks were all queued up before I went on vacation. Now I am back, and I just thought I would discuss a few things, a few thoughts that I had while on vacation, while relaxing, looked at a few things with a fresh look, had some ideas, and so I figured I would briefly run down those ideas and those thoughts in this video. So yeah, I was away for a while and it gave me a chance to clear my mind, think about what's happening, what's not happening, what might come next, and really what are the scenarios for the next year in markets and what could change and why did some things work and some things didn't. And so hopefully I'll give some brief thoughts here, so a few different ideas on a few different sectors. And if there is particular questions on certain things, I might go into more detail in the future. So let's start with diamonds. Now, I was bullish on diamonds last year and dead wrong. Now, I thought a number of things would start happening in 2019 and that the market would look forward to 2019, 2020, supply continuing to come offline, and maybe the pricing would start to anticipate that. That didn't happen, and there were a number of unforeseen, by me at least, bearish developments that happened in 2019. And while the position is now smaller than it used to be in terms of money wise, I still remain bullish on diamonds because you just take a look, and you take a look at what's happening, and you take a look at what's next, and you're like, well, okay, either diamonds are going away, or we might need some. They might need to be making some money, and I can go through a whole number of things of why 2019 sucked, but really, 2019 is over. Looking at 2020, and it looks really bullish. But I obviously was way too early for last year and could still be wrong. So copper. At some point while I was away, and it's annoyingly that point came before the jobs number that really seemed to ignite copper. I thought I was doing some thinking, and I was thinking, you know what? If I'm not at least kind of bullish on copper now, I might not be for the next decade. And so I looked at what the market was pricing, and I looked at some of those copper third quartile or second quartile copper producers, and really the pricing that you're getting in the market for the producers, it really grinded into my head that at a time where I'm kind of getting bullish on copper a little bit. I know there's a lot of risk with, if there's a recession, something like that, but the prices that you're getting on these producers, there's really math in being a copper bull. And I I just look at the market and I'm just thinking, well, eventually copper's going to $3, 350, maybe more. And if some of these companies, some of these producers can survive until then, there's super value there. So do I know that copper's moving now? No. My outlook is kind of mixed, but I see the point. There's math in being a copper bull, and I may be there. Okay, shipping. Shipping is currently a hot, sticky mess. And of all of the subsectors of shipping, I would say that the most exciting to me or the most um, perspective at this point is in the crude and the finished product tankers because this whole situation is such a mess. And that is so good for some out there because you have Aframaxes, old Aframaxes being sold for storage because there's extra fuel in the wrong places, and you have LR2s pretending they're Aframaxes because the rates are all over the place, and no one's ordering ships because they're going to be obsolete in 10 years, and the whole thing is a complete mess. And normally these shipping cycles are short because everyone sees a rate spike, spends money, buys new ships because their equity's inflated because the price is spiking. Now, the price of the equities is going up, but it's not spiking. They're still trading at NAV or discount to NAV. So when it makes more sense for them to buy back their own shares or buy each other, and their vessels are going to be obsolete in 10 years, no one's in a rush to spend money. And so for now, I'm remain long, remain bullish, and I just look at this, and for the time being, it's a steady as she goes type thing. I don't know, is the party going to be forever? No. Do the people that uptick in short selling, do they have it right? Eventually, but I just think that there is a lot of danger in being too early in this game, and for now, these things are just, I don't know. There is way too much crazy potential to be uh, bearish at something that's trading at less than NAV. Gold. Looking at a chart, it looks like a nice chart for you chart guys out there. Probably might agree. That being said, I've heard that it's a crowded trade, although I disagree with that in the fact of in generalist world. I don't think many generalists own gold equities or gold really in general. But the chart looks good near term, but that's not really what I want to talk about here. I want to talk about the gold equities, where, as you know, I was bullish on Equinox and I was bullish on Leogold. And I was laughing when I heard about the merger because I think it's going to prove that or why the gold mining sector is dumb. And I don't mean I disagree with the merger. I really, you have Equinox, which is cheap, and then you have Leogold, which was cheaper, and then you put them together. Why I think it's dumb is once you put them together, you have this company that would have had a market cap of, I don't know, like 1.2 billion, and then Canadian, maybe approximately. I don't know exactly what it was because it's moved up already significantly. But the point is, it's not even proving that 1 plus 1 equals 4. It's like zero point 0.7 plus zero point 0.4 equals 4. Like nobody cares about the cheap smaller producers. And then you get two things and it suddenly becomes one big producer. And you look at the assets that the company has, and then you look at something like Yamana Gold, and they're, add 1 year to the Equinox Leogold, and they're producing as much as Yamana Gold, and that's triple the market cap. I don't know. You know, that's why I don't buy the big ones, buy the littler ones. So that's all I really wanted to say about that, and I know it wasn't too coherent. Sorry, lost the ability to speak while on vacation, apparently. There's worse things. But I remain bullish on gold, and there's a good chance that someday in the future that will be a problem for me, staying bullish too long, just because I really like having some, and I still believe that we're very early days here. So I had some more quick thoughts on my time horizon outlook. And so immediate term, when we look at the CNN Fear Greed Index, which is not relevant most of the time except at extremes. 1 year ago, it was 2 or 4 out of 100. Now it is 93 out of 100. And while I can see there being some arguments where there's a reason for that, this time's different, it's never that different, which is why I'm cautious super immediate term. That being said, short term, kind of bullish. I think the reflation still has some legs that'll take it weeks to months. Now, midterm, and we're talking second half of 2020, I'm concerned. I think there's a chance that the reflation kind of is dead cat bouncy, still half a year. But the fact is we can't really know that yet. It's a bit early to make that call. So that's why I'm looking at the short term and I'm just like, I don't know. Like I said, it's giving me a headache. Long term though, there's a whole bunch of things, particularly many things in the commodity space, copper, many metals. I know copper is a metal. I know. But a whole bunch of things that I'm bullish, very bullish on, and other things that just don't interest me. But yeah, that's why it's like near term bullish, further term bearish, further term bullish. It's like a wave in my head. It's kind of annoying. But anyway, that's it for my thoughts on time horizons. So you all thought I was going to end this with before talking about uranium. Now, that is not the case. I've spoken a ton about uranium and I've made all sorts of videos on thoughts, comments, short commentaries about this, that, and the other thing. Now, while I couldn't add a whole lot more, and many of you seem still interested in listening to different thoughts on uranium, I'm kind of, you know, just there's not much to be said that hasn't been said in one way, shape, or form already. So I'm a bit like just worn down of talking about it, feeling like I'm wearing you guys out too. Now, if people are still wanting to hear me talk about more uranium stuff, that's fine. Let me know. I'll continue. Probably a bit less though, because I'm going to finish up the Uranium 2020 series that I started. Well, before I left, there's still a few more videos to finish. There's a few left. But after that, I think I might talk a bit more sparingly about it. I had a thought though that late in 2019 was probably going to be the bottom for most equities. And I'm just quickly on the reasoning for that. You know, you're either in or out at this point, and I'm not saying you have to be forever. I'm just saying like if the people that are doubting the uranium thesis or we're going to be selling, well, guess what? You had a perfect opportunity year end to get your tax loss in and sell. And so I don't really think there's probably that many people left that are uh, going to give up early next year that haven't already given up late this year. So, I mean, it's more of like a downside catalyst that's kind of out of the way. And so, I mean, obviously, the way I'm set up, I don't really care if the bottom is yesterday or in 2 months. It's really I'm looking a few years out at what's going to happen. But so I don't have a skin in this game. It's just kind of what I was thinking. That's all for today. I hope everyone enjoyed. And while this is never investment advice, the best advice I can give all of you is to have a happy holiday season and enjoy.